structure is a bearish downtrend followed by a break and a new extreme form. So according to Trendline rules, the downtrend played out, because when there is a break of a channel, traders will expect to get a new extreme, and after new extreme is reached, we expect correction or straight up reversal. Strong push above EMA indicating a reversal, and this is how price action likes to move. And you guys can see now a bigger, wider uptrend has been established. So the bias changed from the bearish, followed by a break and new extreme. This is how you can identify that the momentum is changing. And now a strong push above EMA indicating bullish momentum, and we have a wider bullish uptrend working higher. Now market opened around this area right here, and price is right now confirming the overall bullish trend line. You guys can see we have a multiple confirmations of this trend line. There was a new high form, and price created a first entry long, pullback, second entry long. Now a high probability setup is a two-legged pullback, second entry long at the key entry point. But notice the signal bar. Not only this is right around the market open, the signal bar is doji with the bearish body, and it's still below the exponential moving average. And since it is before the stock market open, you have to remain patient and you cannot take this entry just yet, even though it is a two-legged pullback. And notice this is the first break of this uptrend. So according to Trendline rules, you expect for price to create the new high, the new extreme. But notice what happened next. The second entry long failed, and at the same time, there was a new high, first entry long, second entry long, failure that failed as well, because a lot of traders pick short too early, not respecting the fact that price needs to create new extreme, and all the sellers got trapped. It reversed on them quickly, and now this is a double trap. Everybody who went long too early got trapped, and everybody who went short too early against the trend is getting trapped. This is my first trade for the day. I mainly like the strong bullish momentum bar. A lot of times during the open you get a little fake out, and these were two little fake out around the open. As you can see, price pushed above EMA, didn't give us a nice high-low signal bar, and then market suddenly reversed. So price didn't manage to create new high on this one move up. So we have to switch the bias, and when I'm watching this, I need to respect the bearish move down. However, you guys can see price as swiftly as it pushed down, reversed back up. So what is this starting to resemble? Now, since the EMA is getting flat, it's no longer pointing up or down. In fact, EMA is flattened and price is swinging up and down, up and down. So this is starting to look like a trading range structure. At this point, I am aware of the fact that I need to stick to my shortened channels, because I want to follow the trendline rule. I want to see a clear break and a new extreme form. So what I'm going to do first, I'm going to draw a very tight channel, break, no new extreme form, and a strong push above EMA. Since there is a higher low and price didn't manage to create new extreme down, this is the point where I'm going to use to draw my support. I can either just use, it doesn't really matter which bottom I use, it is so close, but the fact that price didn't manage to create a break and a new extreme is indicating that there is something happening, there's a key level. And since price is starting to swing up and down, EMA is getting flat, it's looking like a trading range, this is the support. And at the same time, I'm just going to pick a resistance somewhere around here. I may put it all the way down to here, and this is what I had initially. This explains this turn down right here. So this is the trading range that I'm playing with. You guys can see we have a strong push above EMA, and we have a new low form, first entry short, pullback, second entry short. Notice the two-legged pullback and how market likes to move. However, there is no trigger above this bar right here. I was about to go long here, had we gotten trigger. There was no trigger, it stalled with a big bearish bar, and this is indicating that something is off here. If there's a strong bullish momentum, if sellers got trapped, we are not going to stall like that. So once we stalled, it got a little bit stacked. I decided to cancel the order, and you cannot enter now because you were supposed to enter above this bar right here, had a trigger. This indicated lack of momentum and no bullish reversal. So at this point on, you cannot enter on this bar right here. You guys can see what would have happened. Break, new extreme form, and upon new extreme, price reverse down, swift reversal back up. And on a larger picture, this is the first bullish move up, and this is the second leg up. But notice what happened. Price finally reached the new extreme of this initial uptrend. Remember, we first traded up into this consolidating structure, and you still expect for price to create new extreme. So for that reason, I'm not really looking to short any of these setups. I'm still expecting for price to go from the support all the way up to here and to create new extreme for this uptrend. Once the new high is formed, this is a sign where we can start expect what? Correction or straight up reversal, just like we did here. And notice price strongly pushed below EMA, indicating possible bearish reversal. Now, if I want to pick a reversal, I need to take a reversal pattern Since we are in a trading ranges and this is a small trading range, I can take additional entry. I can take lower high. Lower high is a confirmation of this failed breakout, but I never got lower high below EMA. Remember, price pushed below EMA and I want to see price still keep holding below EMA. Price pushed back up above the EMA. So this is giving me mixed signals. So right now I need to wait, and you guys can see price is getting stacked. EMA is getting in one of these bars, indicating the worst type of congestion. And once the EMA is in one of these bars, and bars are stacked next to each other like this is a congestion, this is a no trade zone, and this can whipsaw you quickly. So there's no trade here. When I'm watching this and I see price coming from the failed breakout of this trading range now, according to rules, most breakouts will fail. Price push below EMA, created a first entry short, pullback, and a second entry short, new high, first entry long, pullback, second entry long, failure. Now this big bearish bar has a two high probability setups at one, and you have a resistance holding at the same time. So you guys can see the key level is holding price, and you have a high probability setup at the key level. Only thing here is it is too congested, so you cannot take this entry. But I want to bring your attention to why, from price action perspective, this setup is great. Price created a tempting lower high, but still the same issue here. You guys see that the EMA is in one of these bars. It is too congested. You can treat it slightly as a little breakout out of this congestion, breakout, pullback. So in that case, you can take this entry because this is now a breakout, pullback pattern, lower high out of this micro congestion, and you still expect to go down here. The bias is bearish. Notice this downtrend needs to form a new extreme. Price continue pushing lower, another break, another new low. The reason why I'm drawing this downtrend right here again, because this is a shortened trading range, the smaller one, and this is the low of the day, and that's the target. Every single time you're coming from this smaller trading range inside of the bigger one, the bigger key level is always the target. So as I saw price pushing lower right here, I'm not only thinking that this earlier downtrend had a new low, I need to redraw it again so I can see when it is okay for me to sell, as this target is right now my target. This low is my target, but I had a break in new low form, so I know, okay, I expected to get a second entry short on the way down, but you guys can see there was no second entry short because price managed to just create a quick little first entry and new low was formed. So once the new low was formed, you have to wait, you have to be patient, and price strongly pushed up. Notice where I'm drawing my trend line from. I'm not drawing my trend line off the very first initial move, because the trend line would look something like this, and this is really not proportionate. This is not giving me information about the structure. So what I need to do, I need to use the high low and redraw the trend line from this point right here. This is where the actual bullish move started. Okay, so 90% of the time you use the first few swings, but you guys can see you have to think about it a little bit. If you use these lines right here, you're not really containing the price action as you would want. So even though technically the uptrend started right here, the true bullish leg started from this point on. So you have to start the trend line from here. And you guys can see most breakouts of trading ranges will fail. Price broke below the trading range and pushed back up. Now at this point on, it is starting to get confusing. You guys can see this is a very tight trading range, and by this time it is all forming extremely quick. It doesn't look like that because we're watching steady chart, but if you're trading this live, it is super quick. It can whipsaw you instantly. A lot of these bars are very large. So today was extremely frustrated, and we're going to talk about it even more. Right now we have uptrend working higher break, attempt to create new extreme, which is enough. In trading ranges, especially tight ones, you may not create a new extreme. Attempt may be strong and close enough because the key levels are going to hold price strongly. They're just going to play major part, and you guys can see you can identify quickly the key levels and how they are coming into play. So as you guys can see, price creating new high, first entry long, pullback, second entry long, failure. Now this is a failed second entry long, reversal pattern. It managed to close slightly below EMA, decent entry. It's confirming the trend line down. At this point on, I still didn't react quickly enough to take this entry right here. But once price created a break of this shortened downtrend, and remember, according to rules, you're coming from the resistance, so expect for price to go all the way down here. There's a first entry short, and I'm anticipating to get a second entry short. Okay, this downtrend needs a new low. And there's a first entry short, pull back higher, second entry short. The bar is way too big, and that's the issue with 90% of trades today. That's 8-point bar. So the stop loss, if I'm scalping for 10, 12 ticks, I cannot risk 32 ticks. So this bar is unenterable. I'm only talking about it had the signal bar been much smaller, because now there's a second entry short, high probability setup with the direction of a trend, and you expect for price to reach the new low. The new low was reached, and notice what happened. Trading range is still the structure. push above EMA, first entry short, pull back, second entry short, failure. Now this was a failed second entry short. The reason why I didn't like it, the way I drew my trend line, I already had a break and such a big spike as a new extreme. But even then, notice, once the higher low formed, it already formed under the congestion. EMA was being completely flat. And the way the higher low formed, it kind of formed way too high up. I would like it, if you had a signal bar that closer to the exponential moving average, it would have been better. But right now, it going sideways, there is no good momentum. The EMA was in one of these bars right here. So it really didn't form strong as I would like. No swift momentum as a first entry short, second entry short failure. It's kind of like similar to here. It consolidated the same way. So this is what I was looking at this point on. You're very close to creating a new high if you draw it a little bit wider. Not the best entry. But if you took this trade right here, I can see why. At this point on, market strongly push down. Okay, so this is confirming that we may have a potentially bearish imbalance, and this low of the day is truly the target. Price is pushing lower. I'm going to redraw the trend line the same way I did right here. And since this is a valid downtrend, I expect to get second entry short at the key entry point, new low form, first entry short, pull back, second entry short at the exponential moving average. At the time I drew my trend line like this, I almost took this trade because there was no trigger first below this bar right here. Once this bar formed, there was a big, massive bullish bar, and then quickly the bar reversed. I was about to enter on a double trap because it looked really bearish. I was preparing my limit order to enter on a double trap, but it never triggered, it never formed, and there was no double trap. It is at the exponential moving average. You expect new low of this downtrend. So this was a very tricky trade, and this was one of those trades that fell. But notice, uptrend working higher, break, new extreme form, and a strong rejection down. And notice how price action is reacting in this trading range. Can you see that the price is creating a series of lower highs and lower lows? We are even now reaching the low of the day. We are not starting to stop here at this support. We are breaking the support and we are creating lower highs. So the trading range is moving all the way down to here. And this is representing bearish imbalance. So what I can do, I can just check if I get a decent trend line, and you guys can see I have a multiple confirmation here. First two swings up the trend line, third swing confirm it, and then you have a lower high confirmation of the key entry point because price created a break and a new extreme. So according to rules, what do you expect? You expect correction or straight up reversal. Price created additional bullish trap, and then it quickly reversed down, a big massive bar, a lower high entry, great setup. There is a failed second entry long, but notice how far away from exponential moving average the failed second entry long formed. It already formed below this bearish doji, so you cannot enter here because the signal bar is terrible, but you need to be within the range of 1 to 2 ticks close to the exponential moving average. It wasn't, so you need to wait here patiently. At this point on, bearish imbalance is coming into play, and this downtrend is starting to be a valid pattern. So at this point on, we are solely looking for second entry shorts at the key entry point. As I'm watching this, there is no great second entry short. Price get a new low. This is where you reset the count, push higher, first break below this bar indicating bearish first entry, no second entry. New low form, first entry short, no second entry. All right, so this is where you have to be really patient. There is no setup, and a lot of these setups were really fast and bars were way too big to enter. So I still am struggling to find a decent entry apart from my first entry at this point on. Uptrend working higher, break, couple legs to a new extreme. I don't like shorting at this point on because it's so stacked. As you're watching this, you have an overshoot. So you have to be a little bit careful here. You have a break, new extreme, so you know that you cannot take shorts once the price is coming from the bottom because overshoot last time leads to breakout trend line or straight up reversal. You cannot deny the price tested this overnight low, broke lower, pull back, tested the breakout area, and this key entry point is coming into play. If you didn't have the trend line here, you definitely have the trend line now. And you keep looking for these key entry points, these trend lines, because this is where all the high probability setups appear. This is where all the magic happens. You guys can see how price is reacting nicely. However, you have multiple bars stacked, and the safer way how to treat this is to wait for price push below EMA and give you a setup below EMA. New high, price pushed higher. There's a 1 or 2 ticks higher above this bar right here. So there's a first entry long, pull back, second entry long, failure. Great failed second entry long context wise, because the key entry point is holding price. The structure is a bearish downtrend, and this is a high probability setup. It is once again too far from the exponential moving average, and you guys can see what can happen if you go far from exponential moving average. Right here, there's an additional pullback. You can get stopped out just to see go where you thought initially where it was going to go, and the same thing right here. There's a new high, first entry long, second entry long, failure. If it's too far away from EMA, you can get trapped on the wrong side. So you need to wait and you need to see price push closer to the exponential moving average. And price kept pushing lower, another first entry short, and you guys can see price created a micro double bottom and we created a triple bottom. This is where I reset the count. Even though technically this low is still the lowest point, this low is higher than this. So this is a first entry short, second entry short here. Notice that these are matching lows. You can treat this as a double bottom and triple bottom at this point on, especially after such a strong bullish momentum up. So once you have a triple bottom right here, you can reset the count here and you have a first entry short, second entry short right here. This is now a high probability setup below the EMA at the key entry point with the direction of a trend. But notice your stop loss has to go above this 7.25 points. So this cannot be entered due to bad money management system. And the same thing right here. This is actually not, not second entry short. This is a double trap. New low, first entry short, second entry short. But you got short-term trend line in play, just like you did right here, break new high. You got short-term trend line in play, break new high. Strong push below EMA indicating bearish momentum, double trap, but you cannot enter this entry for the same reason. 7-point stop loss. So unfortunately here, this cannot be entered. This cannot be entered. It is at the top of the trading range. It is with the direction of a trend. One of those days when it was really difficult to find an entry. It was extremely frustrating and nothing you can do. The bars are too big and there are no clean setups. Just one of those days where you have to fight for every entry. Market gave you only a first entry and that's not according to rules. You know that you have to get at least some form of a high probability setup. You just get only first entry of this key entry point. This is showing you how this key entry point is strong and how simple price action is. Unfortunately, as simple as price action is, sometimes it can be a headache to wait for a clean high probability setups as you never received any here. Just a first entry push lower. Market is reversing higher, drawing the short-term trend lines. At this point on, this is the first break for this major pattern. So you expect to get new extreme according to trendline rules. For that reason, I'm not marking a double trap here. When I was watching this, I was expecting for price to push below EMA and give me a lower high below EMA because I expect to get new low for this major downtrend. 90% of the time, this downtrend will get a new low. And notice, if I'm going to zoom out, it eventually reached the new low. The new low was formed right here. So it just took a little bit of time. This was a unexpected bullish correction, which quite caught me off guard. But it's price action. You cannot force entry. If I don't get the push below EMA, I cannot sell. As long as price is above EMA, this uptrend may get a new extreme. That's possible. I need to wait for price to push below EMA to resume the bearish momentum, and only then I can sell. First leg to a new extreme, pull back, second leg to a new extreme, indicating that the uptrend played out. Strong push below EMA indicating bearish momentum, and there is a slightly aggressive lower high. Why it is aggressive? Because this lower high doesn't really confirm anything. Generally, lower high will confirm failed breakout, second entry, or it will form right after reversal pattern. This is just a lower high after uptrend played out in the middle of nowhere, but the context is telling you you're going to most likely reach to a new extreme, and this uptrend played out had two breaks to a new extreme, so you're not looking for a bigger pattern here. This downtrend needs a new low. You're looking for failed second entry long, but you get a failed second entry long far away from exponential moving average. There's a massive gap. This is risky. You cannot take the entry. Price is too oversold, and this is what can happen. Price strongly push higher. This is where it gets really confusing because you expect new extreme for the major downtrend, and suddenly you have a strong, massive uptrend, two legs up. New high form, first entry long, second entry long, form above EMA, big bullish bar. I think this is way too big again, 5.5 points. So this is not like enormous, but still it is quite a big of a bar. But this is a two-legged pullback above EMA, and it looks like a strong bullish structure. I was quickly looking for, I decided to switch the bias here. I was quickly looking for structure like this. But once we broke the trend line instantly, this is where I quickly realized, okay, the bigger pattern is coming into play. I shouldn't just given up on this so quickly. And as the price is pushing lower, the bias is bearish. But the same story, no high probability, easy setup to spot. There is no two-legged pullback at the key entry point. Price broke the trend line, confirmed the bearish momentum, and there is no higher low or failed second entry long. It just pushed lower without any setup. Same thing right here. Break a new high. You get attempt to get a new high. You get a lower high, but it's a massive bar, 8 point or 7.5 point, let's say, if you got a good limit order. Still closed a little bit at the level of EMA. So you cannot go short here because the bar is too big and you don't get a filled second entry long, nothing. So very frustrating day, no good entry. Price could form a new extreme for this downtrend and for this major downtrend. So you expect correction and you have a strong push above EMA, little break, new high. You're failing to reach the top of the resistance, indicating a bearish imbalance, and overall structure of the market is looking quite bearish. If I'm going to look at the right side of the chart like this, notice price is pushing lower consistently. And this is my second trade for the day. Looking at this, I don't even know why I took it. I forced the entry, new high, first entry long, second entry long, failure. This probably because this was one of those. This was only the first failed second entry long that we finally got, because all of these pushes, they just pushed lower without any failed second entry long, a decent one. So once it formed closer to the EMA, I took it, but this was right into support. It was such a nice bar, and you guys can see what can happen if you go short right into support, because at this point on, notice how we're swinging up, down, up, down, up. EMA is flat. This is a clear trading range. So you guys can see a mental mistake, jumped the gun. I don't even know why I pulled this trigger right here. I ended up being 1-to-1 for the day. Price push higher, break, new high, push lower, break, new low, failed breakout, uptrend working higher, new low, first entry short, second entry short, failure. This is a reversal pattern because you're coming from the failed breakout, downtrend played out, the bigger downtrend played out, even this medium played out, strong push above EMA confirming bullish momentum, and you have a failed second entry short, great bullish bar, and then market closed. So today was extremely tilting day because market was very volatile during this period. The bars were forming extremely quick. You have no time to make the decision. The bars are gigantic. So even though you see high probability setup, you cannot enter because you would be risking way too much. And eventually, as the day slowed down a little bit, fortunately, there were still no good high probability setups. Today was extremely difficult day to read, similar to Friday. So right now we're just having a couple of difficult days back to back, but you know, that's the market cycle that we have to stick with, and nothing pretty much we can do. There are going to be easy days ahead of us. Some days they're just so easy that it's almost unbelievable how easy it is to make money, but some days are like this where you just have a nice downtrend like this without any two-legged pullback at the key entry point. How unusual that is. Well, basically you get a two-legged pullbacks, but the bars are bad, so it kind of multiple things coming together, too big of a single bars and very few high probability setups. So I hope you didn't get chopped today. I hope you had a decent day, even though there were really not that many setups and the structure got a little bit confusing. So I'm going to wrap it up, and I'm going to see you guys in the next one. Take care, everybody.